Hello, and welcome to the stock specific class here for Thursday, April the 29th. It could be that today's a little bit of a bearish reversal day. We'll have to kind of keep an eye on that. We'll look at the charts here in just a second. But one thing you've been hearing me talk about is that the market is definitely overextended right now, due for a little bit of a pullback. I've been saying that for a couple of weeks now, but that's always the case at the top. You just can't perfectly pick tops. All you can do is recognize the conditions of a top and then kind of wait for things to kind of happen or start to take defensive measures and things like that. Bottoms are usually a little bit easier to predict because markets tend to reverse a little bit more sharply from down to up. I think that's because the emotion of fear is usually a little bit stronger than greed. And so when people are panic selling, it drives things down a lot quicker. You hear me say all the time, stocks tend to fall a lot faster than they rise. Drives things down a little bit quicker, and then it exhausts those sellers a lot faster, and then the buyers usually jump in, and usually you get a very aggressive buying at bottoms because that's a normal tendency for most traders is to want to buy. They're in the market to buy something low and have it go higher. And anytime you get a deep enough pullback and they're confident enough that the market's done selling off, they tend to be aggressive buyers at that point. You get to a top and you do get buyers at the top, and it does keep pushing things higher. Complacency sets in where people are confident the market's going to keep going higher, but you don't have that panic selling yet that starts to reverse that from an uptrend into a downtrend. So we'll keep an eye on that here. So let's go through and look at some of the direction alerts here. Momentum, again, is backed off the extreme range there. Breadth is in the extreme range still. It's been that way for the last couple of updates. And sentiment is getting very close to getting into the extreme range. As I mentioned in the last update, you don't have to have sentiment get into the extreme range. You get a pullback in the market. In fact, sentiment very rarely gets into that real, especially to the far right side of that extreme range. On here. And so, kind of the conditions are there. Now, let's kind of skip over to the charts. And you can kind of see, one thing I was talking about on Tuesday was that, the fact that we were moving sideways right through here. Again, you hear me say this all the time. Whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. In this case, it was up. That's where it's more likely to go after it's done moving sideways. Now, you hear me say that all the time, but I think what's really important is it doesn't necessarily tell you how far it should go after it's done moving sideways. You can have, this is considered a breakout move today. We broke out of that range, that sideways range we're in. But it's also a bearish reversal day. Notice how we opened higher right here. We gapped up. Here's where we closed the day before, down here. We opened up here, and we're trading lower than where we're open. Although, if you're looking at CNBC right now, all you see is besides the NASDAQ, the Dow and the S&P are up. And so there's a tendency to just focus on those points on the screen and say, oh, the market, and I hear people on the commentators on CNBC do this all the time, and it's obvious they don't know how to read price action. Because they'll say, oh, the market is strong today, or it's up today, and it's looking good today because it's up. But they're not paying attention to the price action of the day. We opened higher. We're actually moving in the wrong direction. We're moving lower. The only reason why it's showing we're up for the day is because it compares it to the close of the day before. So yeah, we're up compared to the day before, but we're down since the open. This is a bearish reversal price action. And when you hear people say they're reading price action, that's what they're doing. They're saying that the price action today is not good. Now, that doesn't always mean that you have bearish price action, that the market goes down, or bullish price action, market goes up. But because we can't know exactly what the market's going to do, we have to focus on probabilities. And when I see anytime I see a candle like this on a stock or on the market, now again, we have 2 hours before the market closes. A lot could happen, and this could change and look different by the time the market closes. But if it stays this way, that's a bearish reversal candle after a breakout. You got to ask yourself, okay, we broke out to new all-time high. Why are we getting a bearish price action? We should be taken off from here. Well, what have I been saying the last couple of weeks? The buyers just aren't there. We've had very low volume on some of the rally days. It's been some of the lowest volume days of the year. And so you combine that with the fact that you finally break out, you get a bearish reversal day. These things are lining up that are saying we're probably going to be pulling back. I would say that we're at the end of April. Markets tend to correct a lot of times in the month of May, not all the time, but there's a lot of things lining up here. They're saying a pullback. Maybe it's not tomorrow, or maybe, but it could be starting next week. And these signs are pointing to. They keep saying that the market is getting close to a pullback, and I got to pay attention to that. Okay. If we look at, hold on here. Let's look at the DIA. The DIA's already been kind of moving down. It hasn't been breaking out. Now this is still a sideways move. Could it be that could it be that we do have one more push to try to rally higher tomorrow, and the Dow breaks out or something? Yeah, that's definitely possible. Doesn't have to happen, but that's why although we have a bearish reversal day today, I'm not screaming that we're dropping tomorrow, because sometimes the market can try to hold on for another day or two, and it could even try to go higher still. But that's just kind of another kind of warning sign that you want to pay attention to. Here you have the QQQ, same thing. A bearish reversal day has been unable to kind of break out. Now, ultimately, I would have liked to have seen all the indexes do what the SPY did today. All of them break out and have that bearish reversal candle, because the fact that these are still in these sideways ranges leaves that possibility that it could still have one more push higher. Maybe tomorrow does have one more push higher. We'll see. And by the way, you heard me talk about the reason why there's a high probability of that is that typically stocks, when they reverse, they tend to reverse in a more of a pointy fashion. Here we have a sideways fashion, and if it starts to drop from here, these are what I call volcano tops. The key to remember here is that they're rare. It doesn't mean they can't happen though. So that's why it's definitely possible that we reverse next week. We pull back, the market pulls back from here, and the QQQ chart and the Dow chart give us kind of a volcano top look to it. Because I know that's rare. That's why I keep saying, it's possible that maybe we have one more attempted push higher. And so we're not quite in a state of limbo as much as we were last update, but we still don't have a lot of strong direction yet, because I still don't want to buy into a day like today. But I also don't want to short yet, or if I do start to short, it would be just very small amounts, wanting more confirmation before I got a little bit more aggressive. Russell 2000, with the nice thing about this gap up and reversal today on the Russell is it lines up almost perfectly then with that resistance area I told you to pay attention to, that this could be that bearish head and shoulders pattern. Remember, on Tuesday we were real close, and technically that could have been it. We're close enough to that area. You don't always get exactness in these chart patterns and things like that. But now that we're there, we're having this strong bearish reversal candle. That's a pretty good sign. Here was a run up right here, and then you got this bearish reversal candle right here. Hold up. Here you had rally up. Here's a bearish reversal candle. I can show you two bearish reversal candles that didn't necessarily reverse right away. Here's one that was a bearish reversal candle. It didn't shook it off and moved higher. But again, the context of it, when you're at the when you're near a peak or a top and you get a bearish reversal candle, you want to pay attention to that. I'm going to spend in some of the upcoming trainings. I'm going to spend a little bit more time on. We did a class on candlestick formations. But I'm going to spend a little bit more time on some on different ones to kind of individually. I had a comment here that there's no sound. Can everyone hear me okay? Usually when everyone can't hear me, I start getting multiple comments of no sound. So I don't know why that is. I'm hoping that it's not on my end, because I don't know what the problem would be if that's the case. All right. So the Russell's showing a pretty decent reversal. Let's take a look at some individual stocks. And I'm not going to spend a lot of time on the normal stocks I go through, even though this is a stock-specific class. The training today is we're going to get into some of the 21 scans, the preset scans that most of you should have on your site. If not, you can contact the office and they can tell you how you can add those. These are fun to use. These scans do require that you have a little bit of an understanding of what you're looking for, how to read a chart, how to read some price action. The ones we go through normally, the ones I'm about to go through here, it's based on just a simple approach where you're. Although I do like to have people at least have some basic chart knowledge, because not everything in some of these lists I would be buying into. I'd want to be able to recognize which of the stocks are forming better patterns than others. But it does take a lot less time. The normal approach is we go into the sectors. We're looking at the top sectors. For the most part, we want to try to stay in the top groups. These are the rankings of these. These shuffle from time to time, but these are the ones that are outperforming. So we're trying to find the sectors that are outperforming the market, and then which stocks in those sectors are outperforming the other stocks within those sectors. Still doesn't guarantee results, but again, the whole purpose of trading is about managing probabilities, and the more I can put myself into stocks that are moving and outperforming, the more likely I am to have stronger results. Now, I like this couple here on the construction sector, the second one. If you go under the hold section right here, and the reason why I go under the hold section is I'm looking for a 98 strength rank if I can get it. If not, I got to kind of play around with that a little bit. Some of these sectors don't typically have a lot of stocks in the 98 strength rank, and so it can be a little bit of a relative thing on some of these, but you kind of get a feel for that. I've told you before, construction tends to be one of those that has very few stocks that have a 90 high 90s strength rank, or if they do, they're already at a buy and they're already a little more overextended. We're looking for stocks typically in that 98 strength rank that are going that go from hold to buy. Now, the reason why I'm looking into the hold section here is that we can build a little bit of a watch list of stocks that are what we're looking for. We just need them to go from hold to buy, and as soon as they give you that buy signal, you can get in. Now, sometimes you have to wait on these for a few days. Sometimes it's a little bit longer. Sometimes it's immediate. But it's a real simple approach for those that want simplicity. And I deal with all types. People that just want the red light, green light approach, and others that want to do a little bit of both. They want to do a little bit of analysis, but they do like the simplicity of some of the signals. And then there's others that just want to have them show them good stocks, and they'll decide when they want to get in, get out. and that tends to be a little more the advanced group. Now, we did go over U.S. concrete before, and I did like that one. I continue to like this one. There's a couple other ones, though, in the group. And notice these are a little bit lower strength. In fact, they're all below 90, which I think is okay, like I said, based on the relative nature of this sector. But Beezer Homes, BZH is one, has an 86 strength rank, but I like the pattern on it. Now, I would add this one. Let me switch this to signals, because this is, I think, going to a buy or trying to go to a buy signal today. If it holds this, it will probably end up being a buy signal. Now, I also, as kind of a disclaimer, want to throw out there, we're going to go through a lot of stocks, and there's going to be a lot of patterns that I might like today. But one of the reasons why I go over market conditions before we go through these is you want to kind of take you want to understand the market conditions first before you start jumping in and buying a lot of stocks. What was our conclusion from the market analysis? Well, this may not be the best time to be loading up on a lot of stocks. But because we can't perfectly predict, there's nothing that says news can't come out that really excites the market explodes higher. So, we should keep these stocks, probably a lot of these stocks that we go over today, in a little bit of a watch list and keep an eye on them. Because if the market does shake this whole thing off and decide just to get even more overbought, you can jump in, but you jump in with smaller amounts. Instead of buying 10 or 15 stocks, maybe you buy 1 or 2 or something like that. All right, so BZH here. Now, I would add on this one, even though it is close to going back to a buy signal, notice how we're bumping up against this area of resistance. We do have a little bit slightly higher low right here, which is a good sign. That's a bullish sign right there. But we're also still stuck in this range. And if the market does pull back, this thing could pull back to that trend line. And you don't necessarily want to be buying right here, have to wait for it to come down to here, and have to wait for it to come back up to here. So be underwater for the next 3 weeks or whatever until it gets back to where you got in. A better entry, in my opinion, would be to wait for the breakout. If the market does break out, the market's close to breaking out right now too, right? So if it breaks out and this breaks out, then that'd be a better entry. It still wouldn't guarantee it can come back down a little bit or pull back a little bit after it breaks out. Some stocks will do that. But I'd have a little bit more confidence in buying in on a breakout than I would just buying in before a possible breakout, knowing that it could kind of pull back. But this is one to kind of keep an eye on. That looks like it's forming a nice little consolidation there. If it does break out, usually you can take the distance of the range it was in and project that upward from the breakout. That gives you kind of a minimum target area of where you expect that stock to go to. Doesn't always reach that, but it helps you to manage your trades a little bit when you have kind of an idea of what it should be doing. Another one in that sector I like is the one right below it, WMS, Advanced Drainage Systems. Now this one broke out, but it's come back down to that breakout area. It actually looks like it could be dipping back down below it a little bit here. That could happen. It could be this is wave A, wave B, wave C, correcting this move up right here. It's possible it could even move down into this area right here. That's about a 50% retracement of that rally up, pull back. Stocks will tend to retrace about 50% of their moves. So when they pull back, they tend to retrace about halfway. And the key word there is about. Here's a move up. Oops, hold on here. There's a move up right here, retrace, not quite a halfway, about maybe a third of the way. And it has a hold signal right now anyway, so you'd be kind of waiting for this thing to go back to a buy. I'd probably want to be if I'm getting back in, I'd want to be back above that breakout area. But I like the formation of this. Still looks pretty bullish. And I'll do one more in the sectors here. Let's go under basic materials. I think this is one we pointed out before as well. I still like it. PLL, 98 strength rank. So we do have the strength rank that we're looking for. Hold signal, waiting for it to go from hold to buy. And we were talking about kind of this is forming kind of that symmetrical triangle pattern. Still hasn't really broken out of it yet. It was right there at it last update, and then it's kind of pulled back a little bit. Had a little bit of a down day today. It's possible it retests the lower part of that triangle, maybe breaks out a little bit later, maybe not. But I definitely look to wait for that breakout, a clear breakout there, and not just maybe the breakout of this trend line right here, but since it's pulled back a little bit off of this high, I think that'd be a key high right there. Wait for it to go to a higher high. So it pulled back right here and then broke out to a higher high. You not only have a higher high right there, but you have a higher low. And you'd be kind of breaking out of this little congestion area here. So that'd be about 70, 78, 71, or 79, somewhere in that area there. All right. Let's get into screeners now. Last class, went over, talked about a few ways you could set up your own screen criteria. If you don't feel like you're ready for setting it because you don't know what your inputs are, what you're even trying to set up. Hopefully that class I explained a little bit the reason why I like that particular scan, what it was trying to pull from the market, how you can kind of play around with the scan a little bit. But for those that want a little bit simpler, there are some preset scans. You go to your screener tab. You'll see, hold on here. Just a second here. Having an issue with my with the website here. All right, if you go to your screener tab up here and click on that. You should have a tab that says 21 scans right here. If you don't see that, just contact the office and they can tell you what you need to do to get that added on. Most of you should have it as part of a free upgrade or an upgrade of some sort. But it has some preset scans. If you click that little drop-down menu there, you'll see some different preset scans. Now, I'm going to spend some time on these over today's update, and then tomorrow, or not tomorrow's, next week's Tuesdays. There's a lot of these that are fundamental screens, and if you know me, I'm not a fundamental trader at all. I don't look at the fundamentals of a company at all for the most. Well, I shouldn't say that. I mean, sometimes I'm kind of curious, and I'll take a look at different fundamentals. But I haven't spent a lot of time over my trading career focusing on the fundamentals. Now, and the reason is simple: is I always assume that well, first of all, individual smaller traders like you and I can't move the market. We rely on big institutional investors to move the market up or move the market down. These massive, wealthy companies hire the smartest people in the world to do their analysis for them, and most of them base the majority of their decisions off of the fundamentals of the companies. They've got software programs that can break down a company fundamentally better than you and I could ever dream. So my philosophy is I can't compete with them. And even if I could outsmart them and analyze a company better fundamentally than they could, I can't take advantage of it because I can't move the price of that stock. I would still need them to discover what I discovered to be able to push the stock up or down. So it's all about recognizing competitive advantage to me. I decided I'm going to get really good at recognizing what they are doing, because what they are doing, their buying and selling, is going to show up in the chart or in the price action like we looked at today on the SPY. And if I can read that, I can have a better idea of what they're doing, and then I can follow along. And since they're the ones that are moving things, I have a much better shot of making money if I can get really good at following and recognizing what they are doing. So that's my guiding philosophy as a trader. But I get it. Some of you are numbers geeks, and that you love it. That's part of your desire to be in the market, is to analyze this stuff. And good for you. I'm glad. I want everyone that participates in the market to enjoy what they're doing. But I don't use a lot of these fundamental scans. Now, I will go over a few of them next week, or just for those of you that some of these things really are something you really like to see or look for and could utilize. But today I'm going to kind of focus on more of the technical type scans that I'd like to use off of this list. And one of them that's really good and has some really good patterns right now is the second one right here. Well, first of all, this first one here is an ETF scan. And basically what it's doing is it's looking for bullish extremes. In other words, ETFs that are extremely overbought. They've run up a little bit too far, too fast. See, almost all of these are going to have be in the extreme range. And this is a trend reversal approach, meaning you're not trend trading here. You're trying to pick bearish reversals. You're looking for stocks that are overextended, overbought, and you're going to try to take advantage of them coming back down. I'd have to add to this one, though. You got to be able to recognize those bearish reversal candles. It looks like we're forming one today on this particular ETF. But the danger in trying to pick tops or pick bottoms is that you could have a run up. It could get overextended. You can get a bearish reversal candle, and you get a pullback, but it's kind of that choppy pullback. It could just be one of these really, you do go down, but you don't go down very much. It's more sideways. And that's just always the danger of trying to go against the trend, is that you're going to be wrong probably a lot more often than you're right in guessing that exact reversal. Sometimes you can take advantage with options. If you're just looking at a real quick move, you can get a nice percentage gain on like a put option or something like that. But you'd have to check the liquidity, especially with some of these ETFs. Some of these are really small, and they may not have very good, if they even have options available, they may not have very liquid options. So you'd have to kind of be aware of that. But if that's your thing, you're trying to look at bearish reversals for ETFs. And again, the key is these are all ETFs or exchange traded funds. That's a scan that you could use. The next one, though, in that list is this week change 10%. And this is a scan that is looking for a last price that's greater than $2, and that so you have a kind of a minimum price for the stock. Average volume greater than 100,000 shares, excuse me, and a week change of 10% or greater, meaning they've moved up 10% over the last week or greater. The reasoning behind this scan is that you might be finding stocks that are just starting to make these big moves. They're seeing money start to flow into them, and they could be starting to take off. Now, as with all these scans, we're taking out the simplicity of the buy and the sell, meaning that we want to be able to read the chart pattern, and we want to be able to read the price action to make our decision. At least that's what I would recommend. Some of these may have buy signals, some of them may be in hold signals, some of them might even have sell signals, but they might have sell signals, but they're showing the early signs of reversing and moving back up. Meaning you can have a stock that's been beat up quite a bit. It starts to consolidate. It still has that sell signal, but now it's starting to have higher highs, higher lows. May still have that sell signal, but it looks like it's starting to maybe reverse from a downtrend into an uptrend. And so sometimes these scans can help you find that condition and save you having to look at thousands of stocks to try to find it. Now, there are a lot of stocks in this particular scan for today. The nice thing is that it ranks them from the highest strength rank down. So as you go through the list, you're looking at the highest strength rank within the scan, and then go lower from there. So it's always going to keep you closer to the stronger stocks, at least in the beginning, as you're kind of sifting through it. Now, to keep from having to go back and forth from the scan, you can load it all up to where you can just go down each of the lists here. If you click on the top one on the list, and then you can select scan or I think it'll have the 21 scans down here on that drop down menu, and then you select the second drop down menu, the one we're looking at the week change 10%. So it'll load up all those stocks, and then all I have to do to kind of go through the list is just click this little right arrow to go down the list. So it'll go down that list, and then if I need to go back up, if I went down the list and I want to go back up to this one up here, you click that left arrow, it'll take you back up the list. All right, so this one was moving down, stair stepping down. Now look, notice how it has kind of this little bowl shaped look to it. I love these bowl shaped type patterns, especially when you start getting the right side of that bowl. These tend to have a very high probability of moving higher, at least back up to their previous highs. The only thing that would make me hesitate a little bit on this one just right now is that you can see that you have the stair step down, lower highs, lower lows. You did go to a higher high right here, but I don't have that higher low yet. And we might be forming it. You had a bearish reversal day today. It might be kind of forming that little pullback that gives you a higher low. If it could do that, starts to move back up, I'd love it right there. And so again, because I don't have that yet, the market conditions we're in right now that are pointing to a little bit of a pullback, I got to be a little bit more patient on this. So this is one you could put in your watch list. Now, another thing we want to pay attention to, and this is probably applicable here on this one, that's probably why I didn't write it down. We want to make sure these stocks are trading on an exchange. OTC means over the counter. some of these you're not able to access through your broker. They used to be, a lot of these stocks used to be called when you had, these big full service brokers, which is what we had to deal with when I first started trading. They used to have what they called the pink sheets. It was actually a booklet of these stocks that were so small they weren't on an exchange, but you could still trade them. Just not really what you want to get going in, But the screeners will pull in all these stocks. It's just part of it's just one of the criteria that it pulls these in. So I'd quickly look, before you do more analysis on it, quickly look at the exchange and make sure it's trading on like the NASDAQ or the Amex or the New York Stock Exchange, just anything but OTC. Let's go to the next one here and see if we can see. This one's trading on the NASDAQ exchange. So you want to see an exchange there, anything but OTC. That'll tell you at least you're dealing with a company that you could trade. You most likely trade as long as it's there. Okay, here's one that this one's OTC. There we go. Let's skip through that. Let's go to now. MVIS this is actually one that has been pretty popular lately. It broke out on this move right here. The reason why I tell you to stay away from this one right now is that it's one of those stocks that's being driven by the Reddit crowd. You might have heard the GameStop traders that are trading GameStop. You really want to avoid those right now, just because they're taking a lot of the companies that are fundamentally not the greatest companies, the companies that shouldn't be trading at the prices that they're trading at, and they're pushing the prices up as a collective group. The problem with that is that as long as they're still buying it, you're fine and you can do fine. But as soon as they stop, those things crash down because it's like a Ponzi scheme almost, where not quite. I don't. But it's kind of the same philosophy there, where when there's no new buyers anymore, fundamentally the company isn't the greatest, and they tend to come down very, very quickly, and that's why you can see right here it had this big move up, and then it's come almost straight down over the last couple of days. Just if you want that roller coaster ride, go for it, but usually those things end badly. The GameStop thing is likely at some point to end badly. That the history would show us that it usually does, and I tend to want to stay away from. You already have a number of factors that you've got to take into account when you're making a trade or investment. You don't want to throw on the uncertainty of a game that's being played out there on top of it. It's just at least if you're really a serious investor. If you're a gambler and you want to just kind of throw some money out there, that's fine. But I try to stay away from some of those they're being posted on Reddit. Let's go down here. There's GameStop right there. I'm going to go down on the list. I jotted down. I went through the list. I jotted down some of the patterns I liked. So I'm going to kind of skip over to some of the ones I'd like to save you a little bit of time here. But Kirtland is one that I've talked about before on the updates that I've liked. One of the things I had mentioned that you might want to wait for it to kind of break out. There's a kind of a triangle pattern. It looks like it's breaking out today. So that's a pattern there that I like on the breakout there. Again, recognize the current market conditions, and on that breakout, you might want to kind of recognize that it's kind of gone to the far right side of that extreme range. But I do like that stock. I do like that pattern there. This one's not bad right here, COPN. You've got big run up right here. You've got a little bit of a triangle formation. This is a kind of a what we call a descending triangle. If it can break out above that triangle range there, it could take off again. Remember the triangle ranges. When it breaks out, you can take the base of the triangle, project from the breakout point, and it gives you kind of a minimum target to shoot for there. It's down a little bit today. I'd want it to kind of move up a little bit off of here to give you that higher low, at least off of that. Let's see if this one, let's see what the signal is on this one right here. Now you could wait for this to even go back to a buy signal. It's a little ways away from doing that though. Here's one, OCGN. Make sure it's not an OTC stock. Yeah, it's NASDAQ. So you've got this pullback. You had the run up right here. You had the choppy pullback right here. It's come all the way back down. And then you've had this sharp move up, and then it's starting to consolidate, move sideways. First of all, it's on kind of the right side of a, kind of this little bit of a bowl-shaped move it's forming. And you have impulsive up and then corrective. Anytime you see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it instead of moving sideways. So that has, now it could stay sideways for a while, and it could even pull back a little bit as part of that sideways move, a little bit of a corrective move. This is kind of a corrective price action right here. So that's definitely one to kind of keep an eye on. Especially since, again, you got this big surge of volume, and then it's kind of on this consolidation, the volume's kind of backed off a little bit. So you had huge volume, it's kind of backed off a little bit. You know what causes that is that, these big institutional traders, what makes them different from you and I is that they can't buy, you and I, if we want to buy into a company, we don't even think twice. You buy 100 shares. My 100 shares that I buy of a stock most of the time is not going to move the price of that stock. I could get all 100 shares filled at $50 a share or something like that. These big institutions, they're trying to buy millions of shares. And if they put in one order to buy 1 million shares at $50 a share, they're not going to get filled at all 1 million shares at $50. They'll get filled at maybe 1,000 shares at $50, and then the price will go up to $50.25, let's say, and not that dramatically, but the point is the price will go up. If they still want to buy, they'll fill another 1,000 shares at $5.25, and then another 1,000 shares at $5.50. So what's the problem there? Well, the problem is the price is going up, but the price is going up because of their buying. They are jacking the price up on themselves. And just like you and I, we don't want to be doing that. We don't want to be. So how do you buy 1 million shares without jacking the price up? Well, you got to get in over time. You got to get in slowly. How do you get in slowly? Well, you buy a few thousand shares, and it jacks the price up a little bit, and you wait for the price to come back down a little bit. Then you buy more shares, and then you wait for it to come down a little bit. You buy more shares, you wait for the price to come down a little bit. Well, what does that create? It creates your stair step, right? That's why we're looking for that higher highs, higher lows, is because that's telling me that there's likely some big money player. I don't know who it is, but I don't need to know who it is. Somebody is buying these shares, and then they're letting the price come down a little bit, and then they're buying some more. So that's why I want to get in as much as possible on these pullbacks, or when you get these little pullbacks. That's why you see the volume go with it. You had the big sharp move of volume, push the price up, and then the volume drops. They're not buying right now. They're waiting for that price to come down a little bit. And how do you recognize that that's likely to happen? Well, you pay attention to these pullbacks within that stair step. If they tend to be more choppy and sideways, that's what's kind of going on there. The price is kind of falling back down a little bit, and then you tend to have impulsive. When it's impulsive, that means there's aggressive buying going on, and then pulls back in more of a choppy fashion. When you get impulsive up, that means the buyers push it up, and then you get impulsive down, It could be that selling has started. Somebody's aggressively selling now. And the same thing happens. These big institutional traders, if they all try to sell at the same time, they're going to drive the price down and wipe out all their profits immediately because they are getting out too fast. They've got to ease their way out. And so if they really think, okay, this is done, I got to get out of this thing. I can't just get out quickly. So I got to sell a bunch of shares, drive the price down. Maybe there's those retail traders out there. They're buying the dip, right? They're the dip buyers. They're going to buy it because it's on a dip, but they're not strong enough to push it higher. So it tends to be more choppy on the way back up right here. But it's raised the price up again to where that big institutional seller or trader can now sell some more at a little bit higher price. It drives it down again. You get that impulsive move down. Now those retail traders are really dip buying. They think, oh, this is really on sale. They're really buying, but they're not strong enough. So it's more choppy, more sideways. And that's creating the lower highs, lower lows. It's kind of what happened here. Shot straight up, huge volume, and it's kind of eased its way back down. Shot up, higher volume. Now this could still ease back down further, but we like that behavior. We like that, especially on a stock that's a $10 or $11 stock. It might have a lot of still upside potential there. Now again, do I need to know why? Do I need to know if this company is fundamentally, it may not be fundamentally looking good, but maybe this big institutional trader has done some research and they're a biomedical stock. Maybe they've got some sort of invention down the pipeline that's going to save the world, and I don't know, maybe not. But as long as that big institutional trader believes it, that's all I care about, because if he's right, I'll just follow what he's doing. Or I say he like it's one person. It could be a collective. It usually is more of a collective group. But all right, let's go down. Let's skip down a little bit further here. Same thing with this TKAT right here. You had this big move up, huge volume. And look at the pullback here. It looks like a classic ABC pattern. Wave A, wave B, wave C. Pull back on lighter volume. Get a volume surge right here. Moving a little bit sideways, but it looks like it's also maybe starting to roll over here. You could even be developing a inverse head and shoulders pattern. Now this could be chopping sideways for a little bit longer, but these are great patterns. And on some of these particular stocks, you're still getting that higher strength rank too. Some of them might be a little bit. This one's okay, but some of them might be a little bit closer to the extreme. Because a lot of times when you get those sharp bursts off the bottom, they can get you to that extreme range pretty quickly, especially on the lower price stocks, because percentage-wise, they've made huge moves, when they make those bigger moves. That's a nice little pattern there, TKAT. This is one we did in a stock-specific class, or it might have been a market update class a while back. I can't remember how many weeks ago it was, but I was pointing out that you had this big run up right here. It was moving sideways. I recommend that maybe you wait for it to break out. Looked like it started to break out here on Tuesday. It's moved up. Not only has it moved up nicely, but it's moving up nicely today when the market's rebounded quite a bit now. Have to see what the reason was behind that, but it's moved up a little bit. In fact, let's go back real quickly here. Let's go back and check on. Well, we still have a little bit of that bearish reversal. In fact, this is if it closed right here, this is a candlestick formation called a hanging man, because it looks like a hanging man shows up at the top of a move, and it looks like there's the head of the man. Here's the you don't have the arms and legs. It's just the body right there, but it looks like it's they're hanging from the gallows. And as you can imagine, that's a bearish reversal formation. But again, we have another hour before the market closes. Maybe it completely rebounds and moves higher off of this, but that's still considered a little bit of a bearish reversal. What would be interesting to watch on this is the buyers have obviously over the last hour pushed the price off these lows, pushed it back up, but they still haven't been able to push it higher than where it opened today. Now, if they're able to do that, then that's a sign that at least the market's trying to hang on. It's still not a very bullish sign when that type of price action happens at the top of a move. But if it fails to go higher, it's a really bearish sign, because it tells you that buyers attempted to push the market back up, but they couldn't. And you have to ask yourself, well, why couldn't they do it? They didn't have enough energy to do it. So we'll have to see how that kind of ends up closing there. All right, let's go down the list a little bit further, and then we'll try another. Let's do one more, and then we'll try another scan. Actually, a couple more here. Big Five is one that we've done in updates before. Same thing I told you to kind of wait for the breakout. Had that breakout. Was that last Friday? That was last Friday where it broke out, and then it's kind of consolidated a little bit here. But that's a bullish looking pattern still. And we pointed out Futu. I think I pointed out before. Oops, let me go back to that here. We had the nice run up. It's pulled back. What I like about it, though, is it looks like it's forming an inverse head and shoulders pattern, which is very bullish formation. There's your neckline right there. It did break out above the neckline right there, but it pulled right back below it again. If it can break out above that neckline again, that'd be very bullish. That'd be a good entry signal there, especially with the recent weakness in the market. Maybe this thing bounces around a little bit before it does that. That's a pretty bullish looking formation. Again, look at the volume spikes. You had heavy volume right here when it reversed. And it consolidated on lighter volume. Tried to surge right through here, but couldn't. And you still have that lighter volume, but it hasn't. I mean, that would have concerned me a little bit. That was a drop on some pretty high volume there, but it's rebounded from that. So I think it could break out above that back above that neckline right there. I think that'd be pretty bullish on the stock. All right, let's switch to another scan here. There's quite a few more out of this scan that are pretty good. Another one I like is this 5% change right here. This one is looking for stocks that are greater than $2, has a rank that's greater than $10, average volume is greater than 200,000 shares, and has increased 5% in the most recent trading session. So again, it's looking for volume surges. I'm going to skip down on here because there's only a couple of them that I liked on this particular scan. Again, it's from day to day. Sometimes these scans will have a lot of them that I like, and sometimes they won't. Okay, I have the right one here. It's funny. Some of the ones I jotted down I'm not seeing here on the list. Maybe it's still in the, here, let's go to 5% change here. And on these, I'd be looking for kind of the same thing that you look on the other ones. You see kind of that bowl-shaped move. Here it's gone to a higher high right here, but and it has a bearish reversal candle right there. I'd want to see if it pulls back and gives you a higher low. There's also a lot of these are in that extreme reversal risk. Like this IDEX, but it needs to, it also needs to kind of, like to see it kind of break out of this area right here. It has the lower highs, lower lows. It needs to go to a higher high. You can break out above there and have a higher high. It could be reversing. All right, I'm going to skip over to the, I only have time for one more. And like I said, I'll go over some of the fundamental ones in the next update. I'm going to go down to volume 2000. It's another volume indicator. These stocks have an increased volume of 200% over the prior day and have either a hold or a buy signal. So it's, again, it's just looking at something that could be taking off. We want to make sure it's in context. Preferably that the stock has maybe had a run up before and then it's come back down, and then it's getting this big 200% increase in volume. Now, sometimes the problem with this is that you could get the 200 increase in volume, but the stock gaps way up or something. I don't want to chase a big gap up. So I'd like to see just kind of a nice bullish move with that increasing volume to where it looks like it could be starting a pretty decent move up. BLNK had a nice, you can see the volume spike yesterday. It has come down a little bit from the highs. One thing I'm still kind of waiting for on this, though, is that I didn't have a real clear high or low right there. What I'm worried about is that it may, if it reverses, it has a little bit of a bearish reversal candle today. If it drops, you actually have kind of a bearish head and shoulders pattern right there. So I don't know that I'd want to. So I'd want to get up here pretty close to this high up here, maybe even go to a higher high to really jump back into this thing. But it's a good sign that it had that, had that volume spike. It also had a volume spike right here, same thing, right when it kind of dropped right afterwards. So that combination today of that nice move yesterday, but then the kind of a bearish candle today makes me a little bit worried. I'd want to maybe give this one a little bit more time to see if it starts moving higher again. Let's switch this to volume 200%. See something like this. I'm going to go back. So here you had, and some of these are going to probably be based off of earning announcements. We're right in the middle of earnings season. So that's why I don't necessarily want to chase the big gap because it was probably just based off the earnings release. So it gapped up, but it gapped up right here. It closed lower than where it opened. That happens a lot on earning announcements because you get that big move and people are selling on the news. It had a great earnings report. They're selling that great earnings report. That's why it's closing lower for the day. I just don't like to buy gaps because if you look at gaps, the majority of the time when you get a gap is that it will either move sideways for a while or retrace the gap. It'll pull back a little bit within the gap. And sometimes it can keep moving higher, but the higher probability is these two moves, which are both negative for a trade. I don't want to get into a trade where I'm moving sideways for 3 weeks. I don't want to get into a trade where I immediately pull back. I'm underwater for a little bit of time. So when a gap gives you basically a 2 out of 3 chance of being frustrated, I want to avoid that. And you'll find some will have a gap and they take off and run. And you look back and say, man, I wish I would have bought into that. But like I said, I deal with probabilities, and the higher probabilities that it'll move sideways or pull back, I don't want to deal with that. So I tend to avoid. That's one of my reasonings for tending to avoid gaps. Let me find one more here. You see, there's a lot of these gaps. Yeah, see, some of these, they look like they could be moving around. It's good to see the volume here on these 2 days where it looks like it's starting to move back up. You get that little bearish reversal day. And again, it could be that it's just you have a little bit of that inverse and shoulders that's forming. You just have to wait for that right shoulder to form, have pull back a little bit, and take off again. All right. Anyway, the best thing is just kind of play around with it a little bit, and if you're trying it out to see if it, particular scan to see if it fits what you want to do. You could always do a virtual trade, although we don't really emphasize doing virtual trades that much. It's a little bit better practice to do just smaller trades, especially nowadays with you don't have commission costs. For most brokers, don't have commission costs. To take real small positions and kind of see how they work out, see if it's something that works for your objective and your goals. But hopefully that introduced you a little bit or started to get you introduced a little bit to the 21 scans, and we'll do a few more in the next market update next week. All right, thanks everyone. Have a great weekend, and we'll see you next week for the next market update. Bye now.